Earlier in the broadcast, we talked about the national harvest progress, and we had the corn at 11% complete this time around. I do want to take a look at some winter wheat planting numbers and run these by you here. These are the states with the most progress so far of the key producing states. So we have Washington State at 53% planted on their winter wheat now. Their average is 62%. South Dakota up to 50%. They're slightly ahead of schedule. Nebraska 47%. They're running behind their 59% average. Colorado has 39% of their wheat planted. Their 5-year average is 49. Idaho 38% complete, and their 5-year average is 34. The other key states with the progress, we have Texas at 33% done with their winter wheat planting. That's against the 29% average of 5 years. Montana 23%, way behind their 5-year average of 50%. Oregon 21%, their 5-year average 17. Oklahoma 16% done, and Kansas 14% complete on their planting right now, and likely being stalled with the heavy rains going through there right now. All right, let's go to the trading floor in Chicago and find out what's driving the grain markets today. We'll check in with Todd Bubba Horwitz of BubbaTrading.com, and he joins us right now. All right, Todd, looking at the grain trade, a little bit of a divergent trade once again, a little more pressure on the soybeans, the wheat market firming up a little bit. How come?
Good morning, Marlon. Well, I think that, we've been watching soybeans, and of course, last week we broke above that 977 level, but immediately the first opportunity we came right back below it, and here we are lower. Again, this is a very crucial area. If we're going to see continued good pricing, it has to get back through there and hold, but again, it doesn't look like it wants to. It seems to me it's more apt to try to get to 940 before it gets through this 977 level. I think that's one of the big issues you see, and of course, wheat remains the strongest of the whole group, which it has been so, believe it or not, for about the last 18 months.
This, I believe, is the first time in about 2.5 weeks where we've gone 2 whole days without an overnight soybean sale.
Well, again, I think those things are kind of usually ahead of price in a time. I don't think they just show up. So I think those are usually priced in. And I think that what the bigger picture here is that technically we don't look real solid here, and we've really got to get through and hold over 977. Otherwise, it could be quite a while before we get back there, and then they could bring the lows back into play.
All right, we're showing our viewers at home right now a graph of the recent soybean chart activity on that November contract. So, just roughly eyeballing it here, we're kind of halfway between the lows that were set in the middle of the summer there and then the highs that were shortly after that. So what does that mean from this point forward now? I mean, are we kind of caught in a sideways pattern here around that 50% retracement, or what? We could be.
Again, I think that you've got, one of the things you have going right now, Marlon, is it's very quiet, where there's not a lot of trade action because obviously a lot of the money is still going into the equity markets. But if the market starts to flow out, that will really start to push these markets. Now, again, if we can't get back above and break to the upside of this 50% retracement, then I think we're going down to the downside, and I think that brings in room to take us down to 940 or even 920. Now, I'm neither bullish nor bearish here. I'm kind of like the chart. I'm kind of in the middle. I can't really make a good call here because there's too many events that could push us one way or the other based on the chart pricing. And we are at, as you just said, that 50% retracement place. So here it's kind of like watching, and we got to kind of watch the paint dry until we can find a solid footprint that allows us to figure out which way we're going to go from here.
Okay, let's walk through these on the corn market first. We'll look at December, and we did open up about a penny and a half weaker, firmed up a little bit, and now we're down 1/4 cent at 353.5 per bushel. On the soybean trade we were just talking about, we have November now down 7.5 at 963.75 per bushel. Wheat trade, though, on Chicago December, we are now trading 3 1/4 higher at 457.25. That's a nickel off our earlier low. Kansas City December is now trading at 456.25. That's up 2 1/4 cents. And if you look at Minneapolis spring wheat trade, we have December down 3/4 cent at 648. And on the cotton market, as we head into the break, we have that December contract now down 74 points at 68.72 per pound. We'll come back in just a moment and find out what the latest activity is in that livestock trade with Todd Bubba Horwitz when we come back. All right, we're talking with Todd Bubba Horwitz in Chicago right now. He's with BubbaTrading.com, and boy, a sharp move higher in the dollar value here today. Todd, I see where looks like on the futures on the index here, we're up about 480 points or so right now on that December futures. What's up with that?
Well, you know, we've been punished so far down, Marlon, that we figured there'd be a bottom somewhere in here. 93 seemed to be pretty good resistance. It looks like we're breaking out above that. It's been in a pretty solid band, 91 to 93 for about the last 3 or 4 weeks. I think the lows are in the dollar, which I've said a couple of times, and I think you're going to start to see the euro currency, which is the biggest component of the dollar index, is under some pretty heavy pressure here, and that looks to be like more because, of course, nobody wants their currency to be too hot. So I'd look for the dollar to rise. Now, I don't really believe that that'll have a lot of effect on our ag goods right now because the dollar is so low anyways, and we didn't get the benefit of the cheaper dollar on the way down. I don't think we're going to get the bad part of it on the way back up again.
Okay, let's switch to the livestock and look at cattle first. Live cattle and feeder cattle. December live cattle currently down $1.25 at 113.18 per hundredweight. We're about 3 ticks now off our low of the day. February down $0.50 at 116.75 per hundredweight. If you move on to the feeder cattle trade, October is now trading $1.65 lower at 149.95 per hundred. November down $1.54 at 151.58. It looks like more weakness starting to creep back in here again. Of course, we had a sharp down day yesterday here, Todd.
I think that figures. First of all, even before the cattle on feed, we thought that there was some room for the downside, especially in the feeders. I think the fats at 108, 107.5, 108, 108.5, I think those are a buy. I think those have already made the lows, and they're trying to churning their way higher. And as you saw yesterday, they didn't go down limit. However, the feeders, to me, have a lot of room to go on the downside, and I think you could see almost as low as 140 before this is all done. And I would not be surprised now with the expanded limits. I don't expect them to be down limit today, but I wouldn't be surprised at all to see them down quite a bit more than they are now, and to continue to work their way lower. They got a little bit ahead of themselves as we saw that $13 rally within a couple of days. So that's always something that should be an alarm bell that goes off when people are watching that. That's a little bit too far, too fast.
Yeah, I was going to ask you if the feeder cattle market had, as they say, overrun its headlights relative, I guess, to the live cattle trade. Then that placements number really threw some cold water on it, I guess.
Well, you know, again, if everybody loads up on one side, who's there to buy or who's there to sell? So now there's nobody left to push them up. They start to fall on their own weight, and of course, then that creates a little bit of panic, and you start to see a limit down move, especially off of a bad report. I think that's what we saw in the hog market that brought us down to these levels, which is why I think the hogs are a buy here. You know, 56, 57. You know, December, that's where we want to be. I think we looked like we've already put the lows in there, and I'd look for good opportunities to buy there as well.
Well, they are bouncing. December right now up about 58 cents at $58 even per hundredweight. It's about $1.05 off our earlier low today. February 38 higher at 62.98 right now, and the April contract is 20 higher at 68.82. So, Todd, good to visit with you. Real quickly, the crude oil market backing up about $0.50 today. Your thoughts on that? Is it going to continue that or not?
I think crude's going way down. You know, I have a much lower target to 40, which I'll give disclosure. But this rally was built on Brent crude, which is because there's shortage in the North Korean region. We deal in WTI. This was more of a fear-driven rally. I think the oil put its blow off top in yesterday. I would look for it to work its way lower.
All right, interesting stuff. Thanks, Todd. Todd Bubba Horwitz, BubbaTrading.com. He's located in Chicago. So anyway, thanks for the comments.
Well, it's Tuesday. Things could turn around. We'll see. Okay.
And they often do.
Markets editor Marlon Bowling, thank you so much.